Hello and welcome to Little Known Stocks, the show where I try to prove that being boring and doing your research will make you money. Now if you've clicked on this video, you no doubt already know who Projekt Red are. Yes, that is how you say it. But I'll just do a quick recap in case you're not familiar. So they are a games developer based in Poland, and what you might know them for is the Witcher series. So over the past several years they've been making Witcher games, culminating in The Witcher 3 being released in 2015. Now this was a massive success financially, but also more importantly a critical darling that really put them at the top of gamers' list of trusted developers. If you haven't seen The Witcher game, you may recognise Geralt from the Netflix series, which was very popular last year. Nothing to do with CD Projekt, worth saying, but still the same franchise. And in 2020 they released Cyberpunk 2077. Now because of The Witcher 3, this was perhaps the most hyped game of all time, and it released to a buggy mess. There was a hack surrounding it. The game just was pulled from the PlayStation Store because it was such poor quality on the PlayStation 4. So we had this real darling of the industry who massively disappointed in terms of their big release. And what that meant for the stock price was, well, it's a very emotional stock and that can work to its deficit and its benefit. Since The Witcher 3 released, the price has just been running up in anticipation particularly of Cyberpunk's release. And you can see as soon as the issues occurred, it's dropped off absolutely massively from a peak of about 420 zloty, Polish zloty, down to the current price of 156.66. So massive decline, setting it back many years. Now, what I mean by an emotional stock is there's still some massively good fundamentals here in this company, which we'll analyse, but people have been so emotionally tied to the stock that one, it was allowed to ramp up to such a high degree, and two, the sell-off has been much more extreme than the fundamentals should allow for. So is there opportunity here to buy now, or should we wait a bit longer, or is it one that we don't touch? Let's get into it. So the first thing about this stock is, how do you actually buy it? And it was difficult to find, but it has three ticker symbols. If you're trading directly in the Polish Warsaw Stock Exchange, it's CDR. If you're trading on 212, it's OGTLY. And if you're trading in the American exchanges and over the counter, it's OGTLF. But if you are in Europe, I've just found this Saxo Trader app. There is an app as well. This is the desktop version. Really good. And if any of you seen my video on Embracer Group, I've been looking for a way to easily buy Embracer Group without actually having to phone up an exchange. It's on this app, so I'm really happy I found this app. I'll link it in the description below. It is an affiliate link, so if you don't want to trust my opinion or take it with a pinch of salt or whatever, but I was just looking for a way to buy quite rare stocks, and this seems a great option for me at the moment. So when you're looking at this stock, I advise not to look at the usual sources, Yahoo Finance, Google, whatever you use. Go to the Warsaw Stock Exchange because it's the only place that I could find that had all the information correct. So if we look at the market value, so the market cap, it's down at just under 16 billion Polish zloty, so not $15 billion. And that works out just over $4 billion. And if we look at the P/E ratio, you see 13.7. You think, wow, this is an attractive stock, particularly for such a well sought after stock. It must have declined massively. Well, yes, it has, but you'd be wrong in using that figure as well. And this is a really difficult stock to value because they are so reliant on their massive franchises. So The Witcher 3, they had massive revenue. Cyberpunk is even way significantly higher, but they do have these years in between where it's a bit of a desert. And if you hold this stock, you are going to have to experience that. But also that means there's no rush to buy. See what happens over the next year or two, see where this stock shakes out. It could be that the price continues to decline until the anticipation of the next big project. So a nice little bonus as well is that they do pay a dividend, or they will this year. So you will have to own the shares on the 31st of May 2021. but you'll get a nice roughly 3.1% back on your investment based on today's price. They don't pay a dividend every year, it's just in times of extreme earnings, and obviously just releasing Cyberpunk this year is one of those. And they do pay them annually, not quarterly like a lot of companies do, and it is payment around June and ex-dividend date around May. If you're not interested in the dividend, it might just be that the stock price falls after the ex-dividend date, so that's also worth looking out for. Now, CDR Projekt have massive benefits of being based in Poland, and it can't be understated how much more profitable this makes them. So the first one is the GDP per capita. So if I compare them to the US, for an example, where a lot of game developers are based, the GDP per capita is $65,000. So you're going to have to be paying quite a substantial rate for your developers there. If I compare that to Poland, we're between $15,000 and $16,000. Now the rate of increase has been bigger over the past few years, and certainly there's a very highly skilled workers, so you won't be paying them anything like $15,000. It will be significantly more, but it just goes to show how much benefit there could be in your workforce between a company based in the US, for example, maybe Canada or Poland. It's absolutely huge. The second financial benefit is tax. Now, corporation tax in the US is set at 21% at the moment. Biden's aiming to increase that to 26%, which would give a significant hit to a lot of companies. If we compare that to Polish corporation tax at 19%, it doesn't sound like a lot, but that's significant in terms of the bottom line and the amount of profit you can make as a company. But it doesn't stop there, not even close. If we listen to the earnings call, they paid 5% tax on their profits in 2020, and that is absolutely tiny in comparison to what some other companies will be paying comparably. That's due to this Polish R&D tax incentive, so certain companies can apply for this, and they can receive relief from all qualifying expenditure of 100% in 2020 and 150% for companies with research development centres. So not sure what they qualify for, whether it's 100% or the 150%, but certainly they're receiving massive benefits on tax, and their taxable rate of 5% essentially adds a huge amount of profit to their bottom line. They did also note, as it says here as well, that they can carry forward unused credits for up to 6 years, so they won't be paying a lot of tax, assuming they haven't used up all the credits for a very, very long time. So because this stock is so hard to value over time, I had to create my own method. So using the information available to me, I've come up with a method based on information from the earnings reports as well. So CDR Projekt in their earnings report said, based on Cyberpunk only, that they believed the asset was going to depreciate over time at 40% in 2021 and then 12% every year after. So what that means is they believe that the value will decline for that asset, that intellectual property, over 2021 by 40%. And the reason that's so shallow compared to The Witcher 3 is because they have a lot of receipts that they haven't claimed in 2020 for their earnings that will roll over into 2021, so that will make up a significant proportion. They also believe that the PlayStation Store will relist Cyberpunk at some point, and that will drive some revenue. There will be a PlayStation 5 and Xbox Series X version, and there will be DLC and a Game of the Year type version as well to follow. So they're still eking out a lot of revenue from that particular project. So what I've done is I've assumed that the 2019, this is the 2020 earnings per share. I've assumed the 2019 earnings per share is just completely done with and gone, and got to a value that I think represents Cyberpunk's worth, which is 10 zloty 15 per share. Now I've used their methodology, 40% reduction in 2021, which gives us 6 zloty a share, and then you could see it depreciates by 12% every year after that. Please let me know if you think this is absolute rubbish, but it's the best way I could think to do it based on the information that they shared. So when you start to think about that 13.7 price to earnings ratio for 2020, very attractive, it becomes 26 in 2021, 30 in 2022, and so on, up until getting into the 40s in 2024 before they release their next project. Now, what we also need to consider is the other projects they've have in the pipeline, so I'm about to add them in. But the belief that CD Projekt are just a one and done type company and they rely on these big franchises might actually need challenging. If we look at what they've actually done over the past few years since The Witcher released, obviously they've got Cyberpunk, but they had The Witcher 3 Thronebreaker, they had the Gwent card game, which is still ongoing and has a healthy community. They released the 2 DLCs. They've continued to sell the Witcher games. They've got GOG, which is an online platform much like Steam where they sell games. So they've got a lot of other areas where they can be generating revenue in the meantime. And I think they're a much stronger company now than when The Witcher 3 launched. So if we look at Cyberpunk 2077 sales, they haven't even reached half of what The Witcher 3 did. And that may be due to the damning reviews. But if we look at The Witcher 3 from Destructoid, we can see that actually a significant number of copies were sold after the launch year. That includes a big spike in 2019 when the Switch edition was released and kind of a revival as well. So really healthy long-term gains there. Then we've got next year, The Witcher 3 Monster Slayer will be coming out. Now this I'm less hopeful for, particularly after things like the Harry Potter franchise did so poorly. Everyone developed after the massive success of Pokemon Go, which delivered $300 million in revenue in its first month. But you then see Harry Potter and Jurassic Park, etc., all fell off dramatically after that, and we're significantly further away from the launch of Pokemon Go, so AR might not be so popular now, but that's definitely another revenue stream that's worth considering. Add to that Cyberpunk Edgerunners, a new Netflix series, and unlike the Witcher Netflix series, this is very much tied to CD Projekt, so they are going to realise revenues from this. GOG continues to go from strength to strength. They've got the storefront here. Their increase in user base has been significant. Monthly active users up 208%, nearly 400% new registrants. So they've really driven that platform, but that is largely to do with Cyberpunk, and Cyberpunk was a big presence on that storefront when it released. And it's worth saying that it was successful on PC for the most part. People enjoyed the PC release, unlike the console release, so that partly drove that success as well. And then in their earnings call as well, they mentioned focusing much more on merchandising and really building out franchises, building out The Witcher, and they've seen massive success in merchandising for The Witcher and doing the same for Cyberpunk, and really focusing a lot more on this part of the business going forward, which will drive more revenue through the downtime. So potentially there will be a significant stream of revenue after Cyberpunk is considered. And what I've done is I've assumed a conservative, in my opinion, estimate of $50 million from other projects next year, accounting for the augmented reality release, and then 30 million years after, and that assumes no other projects really. So I'm factoring out any other projects that might be surprises, and that brings our price to earnings ratio back to reality in a way. So next year will look like sub 20, then we'll go to the mid to high 20s over the next 3 to 4 years if nothing else happens. So looking a lot more attractive from that standpoint already. Now, many of you may think that I've been too bullish with the 50 million estimate for additional earnings next year and then 30 million the years after. But almost more important than the earnings report that they did at the end of the year is the strategy update that they've just done on the 30th of March. And really this goes into a lot of detail about the future of the company, how they expect to monetize going forward. So I'm just going to play you the first clip from that, which goes into how they expect to merchandise The Witcher and Cyberpunk over the next few years.
Look at the progression of the Witcher franchise using the flywheel effect. The Witcher 1 is where the wheel started spinning. It was a successful beginning for the franchise. It was our first AAA RPG which brought players memorable experiences that gave the Witcher games foothold. This allowed us to slowly but surely expand, and as the wheel keeps spinning, we come to the sequel, The Witcher 2. With 2 games and a growing reputation, more opportunities arise and we are able to branch out more, reaching a wider audience. Then, The Witcher 3 comes around. On launch and long after, players have been attached to this game, and this is where the Witcher franchise truly becomes a global success. And as the flywheel spins, momentum continues to grow, and we widen our audience using the success of both this game and the games that came before. Now we have a recognized franchise with more merchandise, opportunities, partnerships, and also additional developments inspired by the core RPGs.
So not only are they looking to monetize their existing assets better, but they also announced an acquisition. So Canadian Digital Scapes in Vancouver, they are a support studio. So they're not necessarily going to make a total game on their own, but they might be supporting the main studios in the development of The Witcher and Cyberpunk possibly, or maybe they'll create something spin-off. But that's the first thing. And now I'm going to play you a clip as to how they want to focus on dual development and making sure that they're developing at least 2 projects simultaneously, and the use of shared assets across that, which is really exciting and potentially means this studio could grow massively, particularly if they're adding acquisitions of other talented developers across the world. So let's take a look at that clip.
From the technical side, we already have a great foundation with our Red engine, a world-class technology that powers our RPGs. But to ensure that we can serve 2 franchises simultaneously, we are centralizing our Red engine technology. We want to make our development approach be more proactive and future-proofed, so our engine needs to be adaptable in this way. With a centralized engine, we can prepare certain functionalities that can be used in both of our franchises. Technology powering NPC routines or player character control, for example, can be adapted in multiple games at once. It's a change that brings a lot of consistency. Moving to our team structures, we are planning to build cross-functional teams to work on both IPs. These teams will blend disciplines and expertise, so we have closer communication and skill sharing going on from the beginning. Cross-functional teams allow different aspects of development to run in tandem without complication. It's a much more agile approach to game development.
So as well as focusing on development of their core games and making sure they're faster and better at that, they're also talking about online presence, and I'll play you another clip in a minute. But if we look at their main online presence today, Gwent the Witcher card game, which has generated recurring revenue, you can see just from the App Store last month, they made roughly across a few different markets $100,000 just from that. So let's assume it's $1 million over the full year. For a game that was released 2 years ago just on the App Store, not the Android store, probably generating 2 to 3 million a year in revenue. That's impressive. So they're really looking at driving that recurring online revenue, and this is not a company like they were before. They're focused on the offline RPGs, but they are looking at how they can continue to monetize long into the future.
An important part of our future games, and use GOG Galaxy to grow global communities of gamers. Let's stress this here. CD Projekt Red makes single-player, story-driven AAA RPGs. That is not changing. What is changing is our long-term approach to online. And by this we mean ensuring we are properly prepared to implement online elements in our games where they make sense. We don't want to go overboard or lose our single-player DNA. We want to take thoughtful steps to build robust online capabilities. Previously, we hinted that our next AAA would be a multiplayer Cyberpunk game, but we have decided to reconsider this plan. Given our new, more systematic and agile approach, instead of primarily focusing on one big online experience or game, we are focusing on bringing online into all of our franchises one day.
So will I be buying? Well, yes, I think I will, but I don't think I will just yet. If we look at the last year, it's lost roughly 57% of its value, but it isn't really slowing down. And what I'm waiting for is a flattening for at least a month. I want to see it flat, stop the decline, and that's when I'll really start to invest. It doesn't matter if it then curls up a bit. You know, if it's curling up, you know, maybe you miss the first 5%, you don't catch it exactly at the bottom, but you're somewhere near the bottom, and certainly you can see the future growth go on from there. So that's my plan. I really do like this stock. And in terms of the risk of waiting, well, the risk before would have been that maybe they reveal a massive new project. But I'm just going to play you another clip from the strategy meeting where they talk about their marketing strategy.
We have learned many things from our marketing and PR campaigns for Cyberpunk 2077. We see things that need to change in the future, and this is how we will do that. Going forward, our campaigns will be much shorter. We'll wait until much closer to our game's launch before we start showing things like trailers, demos, or going in depth about mechanics, etc.
So you can see from their marketing strategy, they're going to wait much closer to the release to announce any big projects, which is really critical because previously they announced a lot of details about Cyberpunk years before development, and that's what started the price going up. So I think we've got time to let the stock settle down before we buy again. The next catalyst will either be the augmented reality release, which is sometime later this year, or it may be that we see a new earnings report and earnings beat expectations, and that might be the next catalyst as well. But personally, I think we've got a few months to wait before that happens, and I'm certainly willing to hold out until then. So other small things to mention, there was a refund project for CD Projekt, and particularly around Cyberpunk because of the poor quality of the release. They mentioned on the earnings call that they only refunded 30,000 copies, which is very small. I think they said 8.5 million on the call. Then the other thing is they did have a couple of lawsuits, class action lawsuits, over the misleading of shareholders for Cyberpunk. So that's something that they mentioned that they haven't made any provisions for and could be a risk to forward earnings, but they did seem pretty confident about it on the call that either it wasn't significant monetary value or it wasn't going to lead to any sort of payment. So they were pretty confident on that during the call. So that's all I've got time for on this one. I could have spoken about loads and loads of things. There was so much information on this one, but I tried to condense it down to keep the video a reasonable length. But if you do think I've missed anything really crucial, please do let me know down in the comments below. I'd appreciate a like and subscribe if you enjoyed the video, and any feedback really welcome. Otherwise, have a good day.